You are with your trader Henry Ampem. Today we are going to look at another important topic in the forex market, of which has been quite challenging for new traders. So today I thought it wise to look at this particular topic, which is time frame, to help new traders as and when they open charts from the higher time frame, they see market or price moving in a bullish move. Then when they come to lower time frame, they see market reversing or market selling. This has been quite challenging for them. It has come before me on several occasions, and today I thought it wise to make a video on the time frame so that I can explain the time frame to these new traders who are watching me at this very moment, so that as and when they also trade the financial market, they can trade with understanding and make that dream profit that they are looking for, because it's one area that as a newbie you need to understand, or being a trader you need to understand, which is the time frame. And you understanding the time frame also help in the decision that you make on the forex market. So without wasting my time, let's hit the ground running. So as you can see on my screen, I have the real charts that we are going to look at. But before we look at the real chart with regard to the time frame, I've penned down one or two stuffs on the slide that I want us to look at, which is the meaning of the time frame and why the time frame matters. We are going to look at that. Then we move to that of the real chart, as you can see on the screen. Then we look at the real chart with regard to the time frame proper, so that you deepen your understanding on the time frame. So quickly, let's look at what I have for you on the slides. Yes, we are going to look at the time frame, as you can see on the screen. And when we talk about time frame, one may ask, what is it? When we talk about time frame, what is it? Looking at the time frame, as you can see on the screen, in forex trading, a time frame refers to the period each candlestick or bar represents on a price chart. It tells you how much time has passed for the formation of a single candle or a bar. A time frame refers to the period each candlestick or bar represents on the price chart. It tells you how much time has passed for the formation of a single candle or bar. What does this mean as a trader? All that we are saying here is that when you talk about the time frame, the individual candlestick that you see in each of the time frame, the period, or in other words, the time it took for the individual candlestick to form, is what they refer to as the time frame. So on the chart we have what we call the monthly time frame, the weekly time frame. As you can see here, we have the monthly time frame, we have the weekly time frame, we have the daily time frame, we have the 4-hour time frame, which is the H4, we have the 1-hour time frame, 30-minute time frame, 15-minute time frame, 5-minute time frame, and 1-minute time frame. So the M1 represents the 1-minute time frame. All that we are saying here is that the time or the period it took for the individual candlestick to form is what is being referred to as the time frame. So the period, the individual candlestick that you see here, which is the 1-minute time frame, is what we are talking about. So all that this means is that with regard to the 1-minute time frame, the candlestick that you see here, of which my mouse pointer is on, the individual candlestick that you see, which is this bullish candle, use 1 minute to form. That is all that we are talking about. The same thing applies to this bearish candle that you see here, also use same 1 minute to form. Let me zoom it for you to see. Also use 1 minute to form. So basically, when we talk about the time frame, we are talking about the period or the time of which the individual candlestick used to form on the price chart is what is being referred to as the time frame. So when we come to the 5-minute time frame, all that is talking about here is that in the 5-minute time frame, the individual candlestick that you see here used 5 minutes to form. So over here, this bull candle used 5 minutes to form. This big bearish candle also here used same 5 minutes to form. So basically, that is the meaning of the time frame. So back on the slide, so for example, a 1 minute time frame means each candlestick use price movement for 1 minute. Yes, that is what I explained to you on the real chart. That is what I explained to you on the real chart. Then when we come to the next example, a 1 hour time frame, which is the H1, means each candlestick represents 1 hour of price activity. So in a 1 hour time frame, what it means is that in the 1 hour time frame, the individual candlestick that you see here also use 1 hour to form. So after 1 hour, another candle. So with this candle that you see here, this bearish candle, use 1 hour to form. Then after that 1 hour, this bull candle also form. Then after 1 hour, this bull candle also form. So that is what it means. That is what it means. Then when we move to same, maybe let's look at the daily time frame. So with the daily time frame, that one also means that the individual candlesticks that you see here also use one that is daily, the whole day to form. Let me put it that way. Also use the whole day to form. So that is how the time frame works. That is how the time frame works. So I want you guys to take note of it. Not all the candlesticks use the whole day to form, but rather the individual candlestick that you see here use the whole day to form. So after the day ends, another candle will also form. So today, as at time I'm recording this video, today being Saturday, Monday, when market opens, by the close of Monday, a new candle will also form. So this is a candle that formed on Friday. Yes, so on Monday a new candle will also form, representing the daily time frame. So that is how it looks like. So I want you to understand this area, then it will help you in your decision making on the market. We'll look at it properly, so don't worry, you just continue to stick and stay with us. Remember, this is E-marketTubeFX and you are with your trader Henry Ampem. Today we are looking at the time frame of which has been quite challenging for you new traders. So today I want to break this thing down so that as and when you open your chart with respect to the time frame that we have on the chart, you will understand what is actually happening on each of the time frames, so that you analyze or you do your technical analysis properly, so that you make that dream money that you are looking for. So back on the slides, I've already explained the daily to you. So why it matters, why the time frame matters, why the time frame matters. This is very, very important that I need to clear things for you to understand why the time frame matters. So if you are trading or you are a trader and this time frame that we are talking about is challenging to you with regard to you understanding it, then it means your technical analysis wouldn't be as productive, wouldn't yield that kind of profit that you are looking for, because it is one thing that you need to understand as a trader so that you can properly do your technical analysis. You can properly decide as to when to go for a kill, for a buy, or when to go for a sell. So it is one area as a trader you need to understand. So today I'll take my time to break things down for you to understand why it matters. But before we come to why the time frame matters, I want us to go back to the time frame, which is the chart. Then we look at it from the monthly, we come to weekly, we come to daily, 4 hour, 1 hour, the 30 minutes, 15, 5 minutes, and that of the 1 minute time frame. So over here, when you talk about MN, over here, this is MetaTrader. So with MetaTrader, you see MN. The MN represents monthly time frame. So with the monthly time frame, all that we are saying is that in the monthly time frame, the individual candlesticks that you see here, this bull candle used the whole month. So if you are to check, let's check the month. This is March 2020. 20. Yes, this is March 20. Yeah, April 2020 candlestick. This is April 2020 candlestick. This is April 2020 candlestick. Then when you come here, this is May 2020 candlesticks. So all that we are talking about here is that the monthly time frame, the individual candlestick that you see here, use the whole month to form. So to this month being May 2025, as at the time I'm recording this audio, this candlestick is forming in the monthly time frame. So at the end of the month, this candle will complete its formation. So at the end, we'll know whether it's going to be a bull candle or it's going to be a bearish candle. This candle also formed last month. So over here we have this candle here to be that of April candle, which was formed, which is a bull candle. So by the end of this month, we'll also know whether this candle will continue the bullish move or will be a bearish candle. So all that I want you to understand is that when we come to the monthly time frame, the individual candlestick you see here use the whole month to form. Yes. Then when we come to W1, the W1 also represents weekly time frame. So with the weekly time frame, all that I want you to understand as a newbie is that on a weekly time frame, the individual candlesticks that you see here used the whole week to form, from Monday to Friday. On the Forex market opens from Monday and ends on Friday. So as at the time market opens on Monday and market ends on Friday, the candle will finish its formation. So this candle that you see here began its formation on Monday, then ended on Friday. So with the weekly time frame, all that I want you to understand that the market use 5 trading days to form. That is the weekly time frame. So individual candle, be it small or big. Look at this candle that we are talking about here. This doji used 1 week to form. And look at this bearish candle that you see here, also use the same 1 week to form. So it doesn't mean that when the candlestick is small in terms of body, use some few days to form, then the candles that come with big body use the full 5 days to form. No. In the weekly time frame, the individual candlesticks that you see there, be it small or big, use same 5 trading days to form in with respect to the weekly time frame. Why the formation of that candlestick in terms of the doji and the other types of candlestick that you see here, I've already explained that in how to read the candlestick chart. What led the formation of these types of candlestick that you see on the chart, I have already explained that in how to read candlestick chart. So if you've not watched that video, do well and watch that video so that you deepen your understanding with regard to how these candlesticks are formed, so that as and when you are trading the market, you trade with understanding. Remember, this is E-marketTubeFX and you are with your trader Henry Ampem Dako. If you are watching me on YouTube, all that I'm saying is that do not forget to you share, then as and when you continue to share, those that you are sharing my content with will also have the opportunity to watch the very thing that you are learning. So that they can also deepen their understanding with regard to the forex market. So please do not forget to subscribe. Yes, do not forget to subscribe. It is very, very, very important. Continue to subscribe so that you support the E-marketTube channel, so that's when I make new video, you will be the first person to watch. Then those you are sharing the content with will also have the opportunity to learn from what we are learning from E-marketTubeFX. Yes, now let's continue. So this is weekly time frame. Now let's come to that of the daily time frame. Yes, so over here, all that I want you to understand as a newbie is that in the daily time frame, the individual candlestick that you see here used the whole day to form. So with the weekly, we are saying that it used 5 trading days to form. But over here, the individual candlestick used a day to form. So after a day, a new candle will form. So this candle, this bearish candle you see on the trend line, used the whole day, a day to form. Then the bullish candle you see beside it also use a trading day to form. Then this doji that you see with a small body, long wick at the bottom, then a small wick at the top, also use a whole day to form. Yes, I've already said that what led the formation of this candlestick has already been explained in the how to read candlestick chart video. Yes, how to read candlestick chart video. You need to understand what led the formation of these kinds or these types of candlestick as you see on the chart. So do well and watch that video so that you deepen your understanding on the candlestick. So all that I want you to understand is that with this dodgy candlestick, also use the whole day to form. Yes, also use the whole day to form. Then the bearish candle beside it also use the whole day to. So over here you see here, this dodgy use the whole day to form. When it comes to the bull candle that you see here with a big body, then small wick bottom, small wick at the top, also use the whole day to form. I've already said that what led the formation of these kinds of or these types of candlestick that you see on the chart already explained in that video, so do well and watch. Remember, this is E-marketTubeFX and this is your trader Henry Ampem. Do not forget to subscribe, you like and share, so that when I continue to make new video, you will be the first person to watch. And those that you share my content with will also have the opportunity to learn from what you are learning from E-marketTubeFX. Now let's go to 4-hour time frame and see what is happening over there. So with a 4-hour time frame over here, as you can see on the screen, the individual candlesticks that you see here also used 4 hours to form. Yes, over here with the daily, the D1, I said the individual candlesticks that you see here used the whole day, a trading day to form. But when we come to the 4-hour time frame, all I want you to understand is that the individual candlesticks use 4 hours to form. So after 4 hours, a new candle will begin to form. Then after 4 hours, a new candle will begin to form. So it will continue until the day ends, or until the 4-hour cycle ends. Then a new candle will begin to form in that order until the trading week ends. So this is what I want you to understand as a trader. This is what I want you to understand as a new trader, so that when you open your chart and you are doing your technical analysis, you do it effectively with understanding, so that you can trade the market and make that dream profit that you are looking for. So this is the 4-hour time frame, my dear loved one that you are watching me at this very moment. Now let's look at the H1. The H1 also represents the 1 hour time frame. So all that I want you to understand over here is that in the 1 hour time frame, the individual candlestick that you see here, be it small or big, the individual candlestick that you see here, look at this bull candle, use 1 hour to form. Look at this bearish candle, also use same 1 hour to form. Don't be confused. Look at the bearish, the bull candle beside it, also use same 1 hour to form. And look at this big bearish candle, also use same 1 hour to form. This is quite confusing, but I've explained to you already that if you've not watched that video, make sure you watch that video so that you understand why we have this small body in the middle, then we have equal wicks at the top and at the bottom, then why we have candles having that big body with small wicks either at the bottom or at the top. All this thing has been explained in that video, how to read candlestick chart. Do well and watch that video so that you continue to deepen your understanding with regard to the candlestick. So this is the 1 hour time frame. What I want you to understand is that in the 1 hour time frame, the individual candlestick that you see here use 1 hour to form, be it small or big. Remember, this is E-marketTubeFX and you are with your trader Henry Ampem. Do well, you subscribe, you like and share, so that when you do that, make new video, you will be the first person to watch, so that then those you share my content with will also have opportunity to learn from what you are learning from E-marketTubeFX. Quickly, let's look at that of 30-minute time frame, which is M30. Yes, M30. So with the M30 or the 30-minute time frame, all I want you to understand here is that in the M30 time frame, the individual candlestick that you see here also use 30 minutes to form. Yes, also use 30 minutes to form. So at this very moment, don't be confused. Yes, don't be confused. Also use 30 minutes to form. This bull candle used 30 minutes to form. This bearish candle also used 30 minutes. The next bearish candle also used 30 minutes. So all that it means is that after 30 minutes, this candle also formed. Then when the 30 minutes ended, this candle also began to form. Then after the 30 minutes, this bull candle also formed, in that order. So it's a cycle. Yes, so until the trading week ends, the candle will continue to form with respect to the time frame that we are looking at. So quickly, let's look at M15. So over here with the M15, what it means is that the individual candlestick that you see here, the individual candle right from what we have at the corner here, also use 15 minutes to form. Yes, also use 15 minutes to form. Then the next bearish candle beside it also use 15 minutes to form. It runs through up to the end here. The individual candlestick use 15 minutes to form. You are looking at a 15-minute time frame. You are looking at a 15-minute time frame. So after 15 minutes, a new candle will begin to form. Then after another 15 minutes, a new candle will also begin to form. So this is the 15-minute time frame that we are looking at. So guys, if you are with me, do not forget to subscribe, you like and share. Yes, this is E-marketTubeFX, and you are with your trader Henry Ampem. Now let's look at the M5. With the M5 also, the M5 represents the 5-minute time frame. Yes, the 5 minutes time frame. What this also means is that the individual candlestick that you see here also use 5 minutes to form. Don't be confused. When you come to the M5, which is the 5 minutes time frame, the individual candlesticks use 5 minutes to form. So over here with the 15 minutes, we said the individual candlesticks use 15 minutes to form. Immediately you move to the 5-minute time frame, you are in a different map, or in other words, you are in a different topography. You are in a different chart. You are looking at the 5-minute time frame. So you hear traders say, "What time frame are you doing your technical analysis?" Then they will quote the time frame, like maybe 15 minutes, or maybe 1 hour time frame, or maybe 4 hour time frame, or daily time frame, or weekly time frame. So you need to understand what this is. So we are in the 5 minutes time frame. So over here, all I want you to understand is that just as this use 15 minutes to form, when we come to the 5 minutes time frame, what it means is that the individual candlestick that you see here use 5 minutes to form. So meaning twice of this with regard to the formation of the candlestick will give us a 15 minutes. Will give us a 15 minutes. Don't be confused. So the 5 minutes time frame means the individual candlestick use 5 minutes to form. So after 5 minutes, a new candle will begin to form. Then after 5 minutes, another new candle will also begin to form. Then after 5 minutes, another candle will also form, like a cycle, in that order until the trading week ends. Though that is the 5 minutes time frame. Then quickly, let's look at the last one, which happens to be the M1, which is the 1 minute time frame. So with the M1, which is the 1 minute time frame, what it means is that the 1 minute time frame, the individual candlesticks that you see over here, also use 1 minute to form. Also use 1 minute to form. So after 1 minute, another candle formed. Then after a minute, this candle also formed. After a minute, this candle also formed. After a minute, this candle also formed. In that order till this last one that you see here. So on Friday, as at the time market close, this is the last candle formed in the 1 minute time frame. Yeah, this is the last candle formed in the 1 minute time. So please, as and when you open your chart and you see market going for a buy in the higher time frame, for example, like the monthly time frame, frame and you see market selling in the lower time frame, don't be confused. There is a pullback. There is a pullback, a market retracing on the higher time frame. So that pullback is what is reflecting in the lower time frame, be it 1 minute or 5 minutes or 15 minutes. Don't be confused. So that pullback that you see on the higher time frame is what is reflecting on the lower time frame. So don't be confused. So you take note of what is actually happening in the higher time when you are doing your top-down analysis, so that you take prudent decisions so that you can trade the market and make that dream profit that you are looking for. So guys, this is what I want you guys to understand with regard to the time frame. Now, why the time frame matters, that is what I want us to look at. Why it matters. Different time frames shows different perspective of market behavior. Yes, different time frames show different perspective how we see the market. The different time frame shows different perspective of market behavior. Lower time frames, M1, M5, M15, more noise, more signals, better for scalpers or day traders. What does this mean? As a trader, you need to identify the kind of trader that you are. So in the forex market, we have a group of traders, one being a scalper. When you talk about scalpers, for those traders, they love trading the lower time frame, because over there, when they do their technical analysis over there and they see price is going or market is going for a buy, immediately they enter market and they get a profit, they exit or they close trade. They don't wait or remain in the trade for long. That is the scalpers for you. They will just enter or use the 1 minute time frame or the 5 minute time frame, or highly maybe 15-minute time frame. They will do their technical analysis there, use their trading tools, and then they will go in for either a buy or sell. So as and when they make profit quickly, they exit the market. So they will continue to do that to compound their what do you call it, profit that they make on the market. So that is a scalp. And then also we have traders called day traders. For the day traders, they also love trading this lower time frame that we are talking about. Others also trade in the 1 hour time frame or that of the 4 hour time frame. They will do their top-down analysis, then they will decide as to whether to go for a buy or a sell. For them, they love remaining in the trade for maybe an hour or two, or maybe in the whole day, then they exit the market. But with that of the scalpers, for them, mainly they enter the market and they make profit, they exit the market. But with the day traders, they remain the market for some minutes or hours before they finally exit the market with the profit that they get from the market. So they also love using this lower time frame to do their technical analysis, then they decide as to whether to go for a buy or sell. So over here you see the more noise. Yes, more noise. The more noise, there we have another group of traders called positional traders or swing traders. For them, as and when they are trading or they are doing their technical analysis, they normally don't love trading the lower time frame, because using the lower time frame, they see a lot of noise in the lower time frame. For example, if the market going for a buy in the higher time frame, a small pullback, you see that big sell movement in the lower time frame, and they see it as a noise. It doesn't give them a true picture. Let's look at the real chart there. You see what I'm talking about. So over here with this bullish move that you see here, you've seen that there's a small pullback with regard to the 4 hour time frame, or let's come to the daily time frame. Yes, with the daily time frame, you see this bull candle that you see here. So when price reach the trend line, you see that market is reversing. which gives an indication that there is a strong bull movement about to happen. But over here, this small pullback that you see here, when you come to the lower time frame, you see that market is selling deeply. So with the day traders, or what do you call it, with the swing traders, they normally don't love or like trading the lower time frame because they see that time frame to have a lot of noise and it affects their technical analysis. So they prefer trading in the higher time frame so that they can get a true picture of the market that they want to trade. So that is the swing or positional trader. And these traders that we are talking about, they can remain in the trade for almost a whole week. These positional traders that we are talking about can hold trade for months. Some can hold trade for 2-3 months. Some can hold trade for almost 6 months. So this kind of traders, they target higher pips. These traders target like 2,000 to 3,000 to 4,000 to 5,000 to 6,000 pips. So for them, trading in lower time frame, they don't love it at all because over there they see that it comes with a whole lot of noise. It comes with a whole lot of noise, so it doesn't help them to see the true picture of where the market is moving. So they love doing their analysis either from the 4-hour time frame or the daily time frame or the weekly time frame. Then they join the market, then to make that profit that they are looking for. So guys, this is why the time frame matters. This is why it is important for you as a trader to understand the time frame that we are looking at, so that you can decide as to where to trade. Because if you understand the time frame, then you also decide as to be the kind of trader that you will be. Yes, whether a scalper, tap profit, then you exit the market, or a day trader or a swing trader. So you understanding the time frame is one area that you need not to joke with. I'll be very glad for you to watch this video over and over so that you deepen your understanding with regard to the time frame, so that as and when you are trading the market, you make informed decisions so that you will not blow your account. Yes, you will not blow the account. So you hear traders, different traders, scalpers, or maybe swing traders saying that when you go to the higher time with the higher time frame, which is a daily or weekly, the market is in an uptrend. But you see a day trader also saying that the market is downtrending, or maybe the market is in a downtrend, or market is selling. These different traders are seeing this market in different perspective because the time frame that they are using to do their technical analysis is different. So whilst the swing trader is saying that the market is an uptrend, with that small pullback, it is reflecting in the lower time frame. So that day trader or that swing trader is saying that the market is in a downtrend. So we see the two different kinds of traders that we are talking about, all because of the time frame that we are looking at. So as a trader, it is important for you to understand the time frame that we are looking at, so that as and when you are trading the market, you will not make mistake. Because over here on the forex market, whatever mistake that you make is going to cost you your money. So it's one area that we don't joke. Before you enter the forex market, you need to equip yourself with the needed skill and understanding, so that as and when you trade the market, you make that dream profit that you are looking for. Yes, you make that dream profit that you are looking for. Remember, this is E-marketTubeFX, and you are with your trader Henry Ampem Dakon. If you are watching me on YouTube or any other social media handle, do not forget to subscribe. You share my content, so that as and when I make new video, you will be the first person to watch. So those you share my content with will also have the opportunity to learn from what you are learning from E-marketTubeFX. So guys, this is what I want to share with you today. This is what I want to share with you today. So do well and watch the other video, which is how to read the candlestick chart, so that you can deepen your understanding with regard to what led the formation of these different types of candlestick that you see, and this different time frame that we are talking about, so that as and when you trade this market, I want you to trade this market with understanding. I don't want you to gamble. On the forex market, you don't gamble, my friend. On the forex market, you don't gamble. We do our technical analysis. We add the fundamentals. We add our trading tools. Then we decide as to when to go for a buy or when to go for a sell. So if you're a new trader and you want to be a best of your best, do well and acquire the needed skill and that of the knowledge, so that you can trade this market with understanding. Remember, this is E-marketTubeFX, and this is what I want to share with you with regard to the time frame. See you on the flip side. Bye bye.